so long here on the right, and I'm testing starting with 2 contracts and scaling out now, which we just hit first contract. We're using the volatile model since the overnight range was really big. And now we're trailing by 20. Target is plus 80 ticks, and then if you break through there, I think we'll probably add. So the add system is still working as well. Let's see if that happens or not. The bar has to close up there, close above that break. It'll be one of the add behaviors. So then on the left side is running a different data feed, and it got a different signal there, so that's interesting. And then other experiments are going on here using volume profile, and there's no trade there. Okay. All right, so they're just added on this break of this level here. We added the market. Now we're back to, let me see here. We're back to 2 contracts now, and the stop moves to break even plus 1, or it just keeps it at whatever it was if it's closer. It will never move the stop further away from price. And then one issue I have with the scaling out is that when we first do the add, what we want to do when we do the add is move this target out to 80 ticks from the new break-even level, but I can't get that to work quite correctly in the if I'm scaling out like that. So this is still at the first 80 tick target from the first entry. Curiously enough, if we add again, it will move it correctly as we expect. So just the vagaries of the Sierra chart spreadsheet system and how it works makes that difficult. So now we'll see what happens here. It's nice to see that work live. The add happen live like it's supposed to. Get in, or at least look. Alright, so we've broken higher now and are trailing by 20 ticks with 2 contracts. The target is sitting up there. That's just 80 ticks away. 72.96, so in front of, what is that, 4 points in front of 73. That's a good spot for it. See what happens now, if we can hit that or not. We're trailing by 20. So there's a sort of internal war going on with me because I'd like to trail by more, to give the market room to pull back. But what the data shows pretty clearly is that if you use a 20 tick trail, you get taken out more often than you'd like, but you end up, you're more profitable than if you use a 30 tick stop. A 30 tick trail. And the reason is that the market, when it doesn't move nicely for you, then you are making less when you're using the 30 tick trail, and it happens enough that it overcomes the few times that the market moves nicely for you. So here I would say that we were somewhat lucky that this little pullback here and this little one here was not more than 20 ticks. Otherwise we'd already be out. And here we are at the end of the day. This is my result 240. Some interesting things here. Let's go take a look. It's volatile and it's weird, really strange action, I think, because it'll periodically just jump like you see here, and then it just sort of moves quietly, but then the normal stop amounts are not enough. So here we got long. I think we saw this live. scaled out here, okay, and then added there on this on the break of this here. So this is the key thing I'm live testing. Does the auto add still work correctly with the scaling? There's one little issue on the targets, but for the most part, it's been working fine, and a live test here was fine. Didn't quite get the follow through I was hoping for here after this consolidation, and then we broke again, but that was it, right? So you get taken out there. I forget how much you made. The short here. Here's a good example of what I was just talking about. You get. This is actually a fairly classic looking short, but then you pull back just enough to stop you out. So we I didn't quite hit first target there. This is the bars here just look really strange, but enough to move the stop to break even -5, which is my trade management. But because I did that, I ended up taking myself out. Just by a few ticks there. So if the choice here is to change from 2 contracts at 10 ticks to 1 contract at 20, and then this kind of thing you survive. But sort of in general, we were discussing we want to trail by more than 20, but in total it kind of doesn't work out. Let's see. So then, it's like 285. Okay, so I don't get filled here. That's really unfortunate. So these are 285 and 213, and yeah, I just don't get filled because my order's right there. That's really a nice signal. I have to like that. Again, just weirdness in the data here, jumping us in the bars. Let's see, and then another 251 here, which is a short. So that says this break higher, the prediction is failure. But that trade I don't take because I'm into this anti-chop mode here because of this stuff. All right, so as soon as we see those 2 points, we go, all right, we think we're chopping. What we're doing is we're trying to protect ourselves against the chop after that move. That's exactly what we're trying to do. In this case, it kind of works against us. Here, another great example of it's just a little too volatile for that 20-tick trail. Actually, this is not a volatility issue. In general, the market seems to just pull back a little bit too much here. So scale out at 20, and then pull back like 24, and the stops at break even here. 20 ticks back, and you get taken out and miss that piece. So one of the reasons that you consider scaling out like this is a trade like this you would scratch on, as opposed to here I made $100. The other reason is that having made a profit, you can actually trail by more now and still not lose money. So that's another. It just gives you another way to manage your trades depending upon your personality. I don't get a signal down here, which would have been nice, and that's it. Yeah, 9 o'clock is right here. So doing okay on the this scaling out and still auto adding. So I like when I see that the markets are behaving oddly here. So we'll have to see. I'm running the model for volatile markets because we're coming in every day, and now we're back to overnight ranges, pushing 100 points, more than 60 points. In fact, let's take a look at that. The daily here, we're still basically, if we're above this red line on the average daily range, then that means treat it like volatile, and use the volatile model. This is looking interesting here, just longer term. The weekly. This had me concerned here, just for kind of long term. Are we finally topping out here? This climb here on declining volume. So that's like a little bit of a signature of a top. So I'd be curious to see if that is the case or not. Markets are really jittery though, so you're going to continue to be careful. And then you may have seen this here on the kind of when I started this discussion. And what we're doing here is starting some experimentation on adding volume profile to the model, and there's a bunch of different ways to do that. And so I'm just this weekend, coming off of vacation, I had built a model just to see if I could get it to work. And so, that's what this is about. When I look at this, what I like is the blue line represents the value area high at this point in time, and I like what I see right there. Get outside the value area and signal short, right? Or signal long if you're gonna break and go higher. This is here you're reverting back to the value area. Let's see, anything else interesting here? Let's see. Here we're all inside the value area. Here we're outside of it, so this looks more interesting. So this is calling for a short here. That's a really aggressive short though, so we don't take that. 174, a really aggressive long, we don't take that. And you're also in this no longs chop zone. We get a pullback and a long signal there, and the market's rolling over there, and so a loss there. And then we go inside the value area and basically just stay there the whole day. So not too much to do there. The yellow lines represent the low volume nodes, and the dilemma here, this is very interesting, because a low volume node means the market hasn't spent a lot of time there, and so there's a reasonable expectation that it will continue to not spend a lot of time there, and either bounce off these areas or blow through them. So they're good areas to look at. The problem here is that these particular yellow lines are the low volume nodes for the profile as it's currently drawn, and it doesn't help. It doesn't help you understand, well, where was the, at this particular point in time, pick a bar, what was the low volume nodes then? So that's not available. So the historical low volume node, just like the blue line up here and the pink line down here, these are the historical value area low and high lines. We need the historical low volume nodes. So I'm having to write something custom for that, and then we'll do some experimentation there. So we've got that to look forward to, and in the meantime, we're going to continue to be careful here as the markets are jittery, and certainly for July, very not quiet summer trading like you normally expect. Okay, so we'll see what tomorrow brings.